I've been green every day so far this year, just taking the same setups off of the same VWAP, only trading with the trend, taking profits aggressively, and everything that I've done is taught in Futures 2.0. So if you want free access to that, it's down below. That you'll see in that, I don't want to chase this first break of open range high. The opening range is the first 15 minutes of the session. And you can see today, it was pretty strong. All buyers in control. We broke above this black overnight VWAP immediately, so the trend is up. We've been trending up. I mean, on Friday before this, it made an all-time high. Buyers are in control. So when buyers step in that strongly after a bearish overnight, not too surprising. I'm definitely going to flip my bias back to the longs. Now, with that first break of open range high, there is maybe an entry opportunity before it off this New York VWAP bounce, which is my favorite play. But the risk reward to this first break of open range high, like I'm saying, you'd have to want to get out there because it often doesn't run, and it doesn't really run. Just the long here with a stop loss below VWAPs, trying to get out here, just really wasn't appealing for the first trade on a Monday, right? Look at the size of the stop loss if I actually draw it. If I'm long on this bounce with the stop loss below VWAPs, I'm getting out at this high. It's like half an hour, not really worth it. Could you have gone with a tighter one? Sure, maybe you took that and it was more appealing. But when you see this first break, how high did it really go after that? 2 to 5 points, and it came after 30, 40 minutes of drawdown. So that's really why I don't chase it. It often doesn't run very far and it just induces you to get a bad price. But then we let it make a new high. Pulls back to the New York VWAP. Okay, now I'm not chasing the first break. It's coming after a new high of day, so buyers keep showing that strength. Now I want to get long because this is the VWAP that pays. This is where I want to get long, and we keep on building higher lows. Now the stop loss on this one, you can see it's above this black overnight VWAP, not the best, but below this blue New York, so that's good. It's just not covering all my bases. I could easily still be stopped out on this, and it bounced off the overnight. If real quick, we go look on the Tuesday's trade from last week, you'll see this is today's trade. Tuesday last week, it was the same idea. I take the bounce off of New York. It keeps on pulling back, but respects the black overnight and then moves higher. So I had to get back in, make the loss back, whatever. But taking that to today, it's the same idea of like, I don't love the stop because I could easily still get stopped out and still want to be a buyer. But we're willing to, if I'm long way up here, I don't want to stop loss at the bottom of range. That may be what the strategy teaches you, but this is a day where it's this big of an open. It just really turns you off to liking it and it making sense. So I'm willing to long it up here, potentially get stopped out, and just buy it at a lower price. Buy it back at that overnight VWAP like I did in the other markup. Rather than surviving all this drawdown, yes, I maybe still be in the trade, but now I need to get way back up there just to get back to break even. So that's a hell of a trade that just take me out. I could always look to buy it back, or maybe we move lower, right? So that's why I'm willing to take this trade with the stop loss in between both VWAPs. But I know at the very least, stop loss should never be at current structure. Current structure is the most current one we have right there. Maybe this is previous back here, previous to the left, and even more previous back here to the left is that higher low and retest to New York. So that's why I chose this position right here. And you can see the current structure, this first one would have been a terrible stop loss. So you get just wicked out because it's the most obvious, least safe stop loss placement. And then it comes back higher like you want it. So I actually added in after it respected this New York VWAP, breaks the high of day VWAP, because you can see my entry was the bounce play. It actually never took out this purple high of day. So not a bad entry. But once it does take it out, it's the same entry price. All right, let me add it. Because we just held VWAP again. It's clearly been nothing but buyers today. And I'm able to get better risk reward. So I pieced myself out of that add-in as it's getting back up to this high of day. Speak about it all the time in this Futures 2.0 strategy. I'm getting out back at current structure. So you'll never really see giant rips for a new high of day. Sometimes, yes. But a lot of the time, I just want to trade right back to where we were. In this case, on a long, we made it high. Take me back there. And if it breaks out, great. So if it breaks out, I'll piece the rest of that trade out over there like this, right? So speaking about the stop loss today, you've seen this trade. Same example on I bought it off New York, stopped out, but I'm not wrong. I got to buy it back. Now, ideally, the day looks like this, where I'm buying it, or in this case, selling it off of New York, and a stop loss at the top of range, above both of the VWAPs of the overnight, the previous day's New York, and today's New York, right? So if this gets stopped out, I'll be told I'm wrong on the shorts. I might want to go long. But that's not always going to be presented like it because this range is a lot tighter. Where today's, the one we just went over, it's like 150 points on NQ. It was very volatile, really just from the first 10 minutes, right? This giant range was set in the first 10 minutes. Now, if you just erase that and look at it zoomed in from, let's regard that 10 minutes. Since then, if we treat this as our opening range low after those first 10 minutes, it's like, yeah, higher highs and higher lows. If it breaks that higher low, which is where my stop is, I don't love it, right? But I don't need it to get all the way to the bottom of this open to find out I don't love the longs, right? So just kind of zooming in, saying really the only move was those first 10 minutes. Now, on a normal volatile day, I'd love a stop loss at a place where it would invalidate the longs or short. In this case, the other side of the range. So you can see the first 15-minute opening range here, right? I'm short in the middle. Yeah, stop loss at the other level. Where today it was not. It was floating, but because, like I said, so volatile. So hopefully you guys made money on it one way or another. Another thing to look at it like this one, this was in the middle of December. It's in the middle of the range. It's the same idea of like if I'm selling at the bottom of this big range, right? Because it's pretty volatile at the open. Stop loss at top of range. It's not going to be bad, right? You'll definitely find out if you're right or wrong because you're giving it all the space you might possibly need. But if it gets up here, man, I don't want to still be short from way down here. It's not looking good, and I could just always try to sell it back at a higher price rather than sit through all this and then come all the way back down and I'm back at break even. It's a hell of a move. So just picking not current structure, same idea I said earlier, not current structure, right? It might have survived here. Look how much you'd be stressing because it gets awfully close. That's like if I get a stop loss just above previous structure, let's see if this holds, right? But on an ideal day, majority of days, it's at the other side of the range because it's realistic, right? It's 70 points. Can we go get 70? We just moved 150 points here in 10 minutes. Yeah, it's very volatile, but now I want to ask for it to go another 150, right? I don't know if I love that because now I need a rip. So I don't want to give it a giant stop loss on a day like today. But at the end of the day, price is what pays. Let's go to the blank chart here and you'll see. If you reset it on the regular trading hours, what's the price that pays? It's the New York VWAP. That's where the clean bounces came off of. I know some people didn't love the longs because it hadn't fully touched it here, hadn't fully touched it there. It's ideally, yes, it does touch it, but it's not always going to be perfectly off of it. So you have to be willing to say, I want to be long around this price. But I'm going to give it a stop loss below it in case it's not done fully retesting it like it wasn't today, right? It held it again. But I'm able to survive through that because I'm giving it a proper stop. I don't need to time it so perfectly of like, is this the last pullback, right? Is it going to move from here? I don't know. So let me just wait. We don't know. I just want this price with a good stop loss below. So let me try it, right? Otherwise, you missed this move completely. Maybe I think it was more so on ES. But regardless, another thing to do on these drifting days, again, I was done for the day. Nice stream. I'm live every day on ASFX TV, which is where you get Futures 2.0 as well. If you zoom on out, this would be definitely a day you want to use a handoff. A handoff VWAP is the last time we touched New York VWAP, right? Because we're just drifting away. So if you anchor it to there, the last time we left that New York, let's turn that nice bright blue, you'll see it becomes a level you could trade off of, right? So this pullback, ordinarily, if we get rid of this VWAP again, isn't off of a level. I need a key level. I need a key level or a key VWAP bounce like we have down here. So if you need a key VWAP, which you should, which I do too, we don't have it. It never comes back to New York at all. So how could I capitalize on this clearly bullish trend? Well, on these strong ones, where it's clearly one directional, just buyers drifting us higher, using this handoff could be a level to trade off of saying, okay, it's a pullback. We're not off of New York, but I am off of a handoff VWAP. So let's see if we could scalp this move higher. It retested again. Let me see if I could scalp the next move higher, right? So I don't use handoffs every day. Brian Shannon talks about it in his book. You can definitely go read that. It's not meant to be used every day. It's on these strong days when it's very almost looks like unrealistic that we'll get a pullback all the way back down to this New York, right? So if I'm just waiting for a retest to New York, we don't get it at all. But I want to be involved in these higher highs because it's a clean trend, right? So I'll keep it as simple as that. You could put a handoff to the handoff and then a handoff to that, but keep it simple. I just do the one, if any, right? Because it is required on a certain type of day. But I think today, when you see how well it's respected, maybe you don't take this one, but you see how well it's respected, it turns off of it again, you could definitely want to get involved in this next push higher again because you're seeing this VWAP be a useful level. This price keeps rising, keeps on making higher highs and higher lows. What's it going to take for me to finally jump into a long? Maybe this key level bounce, right? So like I said, appreciate you tuning in. Tune into stream, ask questions, go through Futures 2.0. It's all broken down in there. Lots of good lessons today, as well as last Tuesday when we bought it off pretty much a similar VWAP, having to defend the other one. At the end of the day, stop loss placement is key, right? We don't want to get stopped out too early, have to get it back in like we did on this day. It happens, but we don't want that to happen every day. Ideally, we're one and done, clean, seeing the whole idea through. So I appreciate you guys tuning in. Leave any comments and questions you got down below. I'll see you guys on stream tomorrow morning.